same thing you've been doing, you're going to get the same results. So it does take stepping outside your comfort zone and being cognizant of not looking necessarily towards the very, very end goal that might seem unachievable, but what are the one or two steps that you can take to get one or two steps closer to where you want to go.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I'm so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Please make sure to hit that subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have Todd Sulzinger. Todd is the founder and CEO of Blue Elm Investments, a private equity real estate firm based in San Francisco, California. He is a former Silicon Valley finance executive turned real estate investor and founded Blue Elm to offer investors a strategic way to diversify their portfolios by creating passive investment opportunities through the acquisition of apartments, RV parks, and mortgage notes. Todd is also the co-author of Success Habits of Superachievers, an Amazon bestseller with tips and inspiring stories to accelerate your success. Todd, welcome to the show. Before we dive into it, give us a quick 2-minute rundown of who you are, your background, and where you are in your journey to achieving time freedom.
Oh, okay. Yeah, sure. Thanks for having me on your show, Chris. I appreciate it. Yeah, again, I'm based here in the San Francisco Bay Area. I was born and raised in San Jose, also in the Bay Area, and grew up here, went to San Jose State University, and started my career right after leaving school in finance, and ended up working for a variety of technology companies, and just grew my career like a lot of people do, with a plan to get a good job, climb the corporate ladder, save money, build your 401k, and hopefully have a happy retirement. So that's kind of the way my plan started. And then, through that process, I discovered real estate and found my way towards building my real estate syndication company.
I love that. And, I want to really start by talking to us about your early days in your journey, right? Back when you were a college student, I mean, did you always know you wanted to be in finance, or what was that? How did that even start?
I didn't when I was growing up. I wanted to be a professional baseball player. That was my goal in life. I played through Little League. I pitched a little bit in junior college. And then when I went to San Jose State, played 1 year of junior varsity baseball. And during that time that I realized I hit my limit and that I wasn't going to be a professional baseball player. So at that point in time, I was like, okay, what am I going to do? And when I was in high school, kind of going into college, it seemed like the two things that people were doing was either like, get a computer science degree or something in accounting and finance. And my dad had worked at Lockheed for probably at that time, close to 30 years. So that was my role model, was just somebody who had kind of gotten a job like really early in their career. He climbed the ladder where he was working at Lockheed, had a kind of good career, was able to have a lot of flexibility in terms of the getting off work in time to be able to attend my baseball games and spend time with the family, and had a great pension. But when I was getting out of school in the 90s, that pensions were going away, and that sort of idea of working for a company for your whole life was also something that wasn't happening anymore. So I guess kind of going into college, I had always been good with math and numbers, and finance seemed interesting. And it seemed like that could be a good way to be able to find a good job after I graduated.
Very cool. And so you ultimately came across that decision to jump into the finance realm. And so as a new graduate back in that day, what did that kind of look like for you? I mean, how did you get yourself from this new grad with a finance degree up until the point to where you landed a position in Silicon Valley as a finance executive? I guess, what did that process look like?
Yeah, I was really fortunate. When I was in school, I got a part-time job working for this small little networking company. That my girlfriend at the time, her mother worked at this company. She knew I was looking for a part-time job. So I started working, kind of doing bookkeeping and light accounting. That person I was working for went to another company. I followed him there. So I was working part-time there up until the time I graduated from school. And then from there was able to transition into working full-time. And this was it was a Silicon Valley networking startup with probably 20, 25 people. And I got to do a lot of different things, all accounting related, also some customer service and order entry related. And it was really kind of being in the right place, the right time in this company's growth, because I was there for about 2 years. I was probably kind of in my mid 20s, and the CEO of the company asked if I'd like to relocate to the UK. So that was kind of a
Oh, wow.
big deal, right? Because I didn't feel like I had the experience or background yet at that point, but he said he needed somebody out there in Europe to kind of keep an eye on things for the US company. So moved to Europe, spent about 2.5 years living in England, and during that time got to help our German, French, and Italian offices kind of start their open. As those offices were opening, I helped them kind of set up all of their administrative and finance infrastructure.
Holy cow. So it really kind of looked like the ducks lined up in a row there and you took advantage of that opportunity that was presented to you, right? So it's funny because we just came back from a 2-week trip in Europe and London was the first stop there. And what an incredible city. I just
Yeah,
want
I
to just
loved it.
mention that and to be able to carry on that rustle and bustle of another busy city that's across the pond here was I can't imagine how
Well,
cool it must
actually,
have been, especially as a
we were based
mid-20-year-old.
about an hour outside of London, so that was maybe kind of one of the downsides. It just happened to be where the managing director lived in this town called Abingdon, pretty close to Oxford. So we'd often get a chance to go into London, about an hour train ride. So it was good and bad. It was great kind of being out in the country because, again, hour from London, we were near Bath and Windsor and a lot of really cool cities. But it was, yeah, fantastic experience that I couldn't have imagined getting any other way than being in a startup environment like that, where in this case, the CEO is kind of looking for, oh my gosh, like what team do I have? Who can I put in these different positions? And probably from his standpoint, who can I move to the UK? And I don't have to probably pay a big salary because this guy's just going to work his butt off trying to prove himself while he's over there.
Absolutely. And is that essentially what you end up doing? I
That
guess, what was that experience
that
like?
was, yeah. I was definitely being thrown in the deep end. I was working with people that were more experienced than I was, but it was also a case of training some people. Like, I remember opening our French office, and there was a kind of executive admin working for the company, and she didn't have any kind of finance experience. So even with my experience I had up to that point, I could kind of get the book set up, get her trained, and be able to do what I needed to do to get the financial information back to our headquarters every month.
Wow. And so you landed this position, you moved across the pond to the UK, and you fulfilled this role for about 2.5 years. And so after those 2.5 years, I guess, where was the pivot there? What did it look like after those 2.5 years for you?
Well, at that point in time, I had the opportunity to move from the UK to Amsterdam, and decided, being out in Europe for a couple of years it was enough for me, and was ready to move back home. And this is kind of, also part of the story about why I transitioned into working in finance. Is when I started with this company, I got just out of college, I got stock options, and it was like, oh my gosh, this company is going to go public and I'm going to make $1 million. And in this company's case, they are still a private company. So I
Wow.
had stock options, I purchased the stock, and they are still private. So that was one of the initial ones that was like, oh, wow, I'm in Silicon Valley. I'm going to go through an IPO and make millions of dollars. And sometimes that works out. And other times companies either go out of business or they stay private, and there's not this big liquidity event. So, so I stayed with them for about another couple of years after I moved back to the US. And that's something that's pretty common. A lot of times when people are expats and move overseas for a role, they come back and either the company's changed, there's really not quite the right role for them when they come back. And then I ended up moving from that company to another startup that was about 6 to 9 months ready before they went public, and kind of transitioned into a financial planning role and went through the IPO process with them.
Very interesting. Out of curiosity, I always wondered about that because you're right. I mean, when it comes to Silicon Valley, a lot of these startup companies either have one or two options. They go down to zero
Hmm.
or they go
Right.
public. I guess what are some of the barriers that may prevent a company, or maybe it's intentional, from going public if
Hmm.
they initially start out as private? What does that kind of look like?
Well, yeah, I think in the first company that I worked for, that in that case, it was really just the founder. He was Japanese, born in Japan, but lived in the U.S. most of his life. They actually did go public on the Tokyo Stock Exchange, but the U.S. company remained private. And I think in that situation, it was just kind of a matter of control from his standpoint of not wanting to become a public company and be beholden to shareholders and quarterly earnings reports and things like that. Um, the next company I went to did actually go public after again after about 9 months. They were acquired about a year and a half after the IPO, which was another tipping point for me of like, oh my gosh, this is so great. I got a great job, getting some promotions, went through an IPO. It was a great team I was working with. The CFO I was working for was outstanding. And then we got acquired by this company based in Philadelphia. And I was like, oh damn, okay, this is the way it happens. They don't need two finance departments and two HR and two IT.
Oh,
So
wow.
my CFO
Yeah.
left to go work for another company. She recruited me to leave. So it was disappointing at that point in time to kind of go through the IPO process with this good company, but then get it acquired right after that. So that kind of started to build up this sense of I really don't have that much control over my career when these kind of things keep happening.
Yeah, that's a really interesting perspective. I mean, I never really understood what that process looked like for a typical startup.
Yeah.
I mean, it sounds like, you start up the company, you go through all of these maybe first level venture capital funding,
Hmm.
whatever it
Hmm.
may be to kind of get the ground running, and then you build the business, grow revenue
Right.
with the intentions of going public.
Hmm.
And then once that goes public, it's interesting to see that that's when these mergers and acquisitions kind of take place and they
Right.
consolidate their departments. Is that pretty common in your experience from what you've seen in the industry?
I would say it is. There are companies that go public and stay independent and public for a long time. In
Yeah.
the company as I was working for, sometimes medical device companies, again, networking hardware, business software, those often do lend themselves to being acquired. And in those situations, sometimes they might take the engineering team with them who are kind of like building the product. But like I said, when it relates to finance and HR and IT and a lot of administrative functions, when they do a press release and say, hey, we've acquired this company and we're going to find $100 million in synergies to save money and make this acquisition worthwhile. A lot of times those synergies mean downsizing the administrative functions or kind of letting those, letting those people, those functions merge.
Yeah, that makes sense. And so it sounded like you were kind of getting recruited from your former CFO to kind of join them, jump ship, and
I
kind of
did,
take on
yes.
another
Hmm.
opportunity.
Hmm. So yeah, so
So
that
what did that look like?
That was it was a funny company. They were three individual companies coming together with a plan to go public, and it didn't end up working out. They thought they could merge these disparate companies together. They couldn't really. They ended up selling the individual companies off in individual pieces. The CFO that recruited me ended up leaving the company after about a
Oh my
year,
gosh.
which was disappointing because, again, she's the reason why I jumped ship. And then ended up going from there to another, I guess, kind of can't miss startup that kind of started a crater after the dot-com bust. So,
Oh yeah.
another company that was great investors, great management team, and ended up. I started with when there were about 20 to 25 people, grew to around almost 200 people, and then slowly started laying people off, and they ended up being sold to IBM for a fraction of the value that they were at the peak when most of their venture capital funding came in.
Wow. So Todd, I mean, over the course of your career, I mean, how many times you kind of go through this process of like you joining a company, they get to a certain point, they reach a certain milestone, something happens that triggers you to kind of move on because the opportunities are no longer there. I mean, how many times over the course of your career have you found yourself doing this?
It's probably I would say 5 or 6 times that's happened to me. I guess
Wow.
probably
Yeah.
until the last time when I left my last W-2 job that was really of my choosing. And that's when when I decided to found Blue Elm Investments, because I didn't want to continue to be in that position where I didn't have any control over, my career, my income, my path. So that's when I decided to. I was fortunate enough at that company to be able to kind of transition from working full time in a role down to a 4-day a week position, and then do some finance consulting as I was transitioning from working in corporate finance to building my finance career. But it's hard to do. It's hard to take that plunge. But I just kept looking out, 4 or 5 years down the road, thinking I didn't want to be in that position again when I was 50 or 55 or 60, whatever it was, and be in another situation where it'd be like, dang, got laid off again because again, a merger happened or a company went out of business. So anyway, so that was kind of the tipping point I finally got to, where it's like, I gotta figure this out and figure out how I can build a business around real estate investing.
Absolutely. I mean, I think it sounds like you had finally had a realization that, like, you need to have a little bit more control
Mm-hmm.
over your career path, or the way in which you were able to kind of bring home resources to
Mm-hmm.
you and your family. And so that's where you kind of transitioned into real estate.
Right.
So at some point or another, Todd, did you own properties as a landlord in some degree, or did you transition straight to acquiring these large multifamily properties or these larger apartment buildings right off the get-go?
Yeah, I started buying single family homes in Dallas, actually. And it was through the real estate guys, Robert Helms and Russell Gray. I don't know if you know those guys, but they actually used to live
Absolutely.
pretty close to me. So I used to go to their local meetups, met this one guy that was selling turnkey properties in Dallas. And at that time, I was like, oh my gosh, you gotta be kidding me. What's that going to be like owning properties 1,000 miles from where I live? But I went out there on a bus tour, met property managers and builders and insurance brokers, and decided to take the plunge and ended up buying several single family homes in DFW. And it actually worked. When you buy the right product in the right market with a good property manager, it it worked for me. So it proved the case for me that you could own property that far away and still have them be good investments.
That's fantastic. And Todd, I really want to drive home the point there, in that, like, when you went out and did that bus tour, you really found a good team.
Mm-hmm.
We talk about leverage in real estate from a financial standpoint, but you're also talking about leverage in real estate from the expertise and
Yes.
the time of other people who really are able to carry out the business plan appropriately. And in
Mm-hmm.
your case, it sounded like you found a property manager, a lender. I guess, who else did you kind of find out there when you took that bus tour?
Yeah, so the property manager, lender, insurance broker, and the person actually doing the development. So it was actually a person
Oh,
who, the
wow.
first person I bought homes from, had bought a plot of land and was developing homes for investors. So he was building homes for investors. So he was kind of building out a neighborhood that was already. The foundation of the neighborhood was already built out, and it was really essentially a kind of a build to rent before build to rent was even called that back in like
Yeah.
2013. So yeah, so it was kind of just like meeting all those people in person and trying to get a sense of a neighborhood, which is something you really need help with a property manager with. When you live locally, you absolutely know like where the right traffic patterns are, where the better parts of neighborhoods are, or the worst parts, where the right school districts are. So going to a new city like Dallas, which is huge, trying to figure that out from, if I had to do it myself, I probably wouldn't have been able to do that, but actually able to talk to people in those markets, property managers especially, to understand like why a certain neighborhood or part of a metro makes more sense than others.
Absolutely. Yeah, and that's a really good point there. And so you came to a position to where you started having this real estate portfolio of single family homes. They were in a different market, but ultimately they were performing really well for you. And so you're sitting pretty over there, Todd. And so, like, what was that experience like? How did you end up transitioning into these alternative assets in the real estate space? Larger apartments, RV parks, mortgage notes.
Mm-hmm.
What did that kind of look like for you as far as a transition?
Well, I decided I wanted to build a real estate syndication business, and it was actually through the real estate guys that it took me a while to get there. I went to one of their syndication events back in 2015 just to educate myself and learn about it, and thought, okay, I want to do this. And then I think what happens to a lot of people is, you kind of leave one of those events, you're excited, you're gung ho, and you don't take the action necessary to make it happen. And combined with having a good job and a good career and a steady income and benefits and all those things. So I didn't do anything specifically about it. I went back to their event again in 2018 and decided if I'm really going to make something of this business, I got to do it. So that's when I really decided to start my company, really start making connections with brokers and getting all the legal entities set up for my business. And I was going to initially partner with a guy that I was working with at the time to buy a mobile home park. And we went through the process together. He was going to bring in his investors. I went out and found the park, working with brokers and doing a lot of relationship building there. And partway through the process, after we had a park in due diligence, one of his bigger funding partners backed out. So I had to go and just either back out the deal or finish it myself. So I pushed on through and raised money from investors that I'd been talking to over the prior years. I told them I was building up this business and ended up buying a couple of mobile home parks in Georgia, about a mile from each other.
Very, very cool. And so you closed on this mobile home park. Prior to that, you owned a portfolio of single family homes. Right. So obviously this is a slightly different asset class here. And so what did that look like for you the moment you closed? I mean, I guess in my head here, I'm thinking, well, I know how to do single family homes, but now I'm responsible for this mobile home park, completely different asset class. I guess, what did that look like for you once you closed, and how did you guys end up repositioning that property there?
Yeah, it was exciting and scary. I had a property management consulting company who specialized in the business that helped me with due diligence and negotiation, and then also with property management. So I would say exciting and nervous. I think because of my remote management experience before, I thought, hey, this is doable. So just kind of started that process, and we bought the park in the fall of 2019. Timing, which turned out not to be great because it was right before COVID hit, and courts closed, and a lot of things shut down during that time. So that was a bit of a struggle as we first bought the park to get going. But you kind of learn as you go in terms of how to manage a different asset class. But it's still real estate. You have to deal with the asset management, what's happening at the property, finding new tenants, replacing old tenants you don't want in the park, and just kind of dealing with things on a day-to-day basis.
Absolutely. And the thing that the consistent theme that I'm coming across here is really relying on some experts that have experience in the field that you're going into, right? So, when you first purchased, off market, very far away from where you currently lived when you purchased your single family rental portfolio, you depended on a team.
Right.
Then you went ahead and closed on an RV park or a mobile home park. And then you also depended on another team who had expertise in that area. Is that kind of the philosophy that you kind of go by when it comes to investing in these other asset classes within real estate?
It is. I mean, part of it's from a time freedom standpoint, but then also some of it's from an expertise standpoint. I know plenty of people who are really active in their, whether it's mobile home parks or small multifamily they own, and they don't mind looking at applications and running credit checks and reviewing tenants and going through the eviction process, and maybe going to the asset itself and unclogging toilets or whatever. I didn't want to do that. That was part of the idea behind trying to build a business and a real estate portfolio, was to have some portion of that be passive, where there'd be somebody else managing those properties versus me being involved in every decision. So yeah, a combination of time freedom, as well as there's people better at doing other things than I am.
Absolutely. I love to say that the same thing as well is I'd rather rely on somebody. We were talking about this before the call here is the importance of, I can try doing it, and it's going to take a lot of time to learn how to do it, let alone execute. And then on top of that, I'm probably going to end up with a product that is subpar compared to if I just hired out the right person from the job from the get-go.
Yes, I have done that.
Very, very important stuff here. Well, Todd, I also want to kind of make note is that you are also co-author of a book here, Success Habits of Superachievers, and that became an Amazon bestseller. So, talk to us briefly about what that book is like. I mean, how did you go about positioning yourself to write that?
Yeah, so that book was a book that I co-authored with about 80 other people. Kyle Wilson, who used to be Jim Rohn's business partner, um, puts these collaborative books together. So it's a group of us. Each book has a theme, and he has a series of books he's put out. And this one was about success habits, where each of the authors share their stories about some tips and tricks that they've used to kind of make their career successful. So I have a chapter in that book and told a little bit about my story and background and how I got into what I was doing, and some of the things that I use on a regular basis to kind of keep me on task, keep me motivated, and from a mindset standpoint, keep my head filled with the best thoughts.
Absolutely. I mean, oftentimes the biggest barrier to people's success is right between their two ears. So,
Absolutely.
if you can kind of shift your mindset in the right direction, you'd be able to take the appropriate action to make those goals a reality.
Yep, exactly.
All right, folks. So, we're coming towards the end of today's show. But before we finish, it is time for the Freedom Five. These are 5 questions that we ask every guest on our show, starting with the most important question: what is your why? What is the underlying motivation behind everything it is that you do?
I think one of the things I found, especially that I didn't really realize in my corporate career that I've found since I've started this business, is I really enjoy helping people. It's funny, I had an investor call last week where somebody was calling about my business and wanted to learn about my investment opportunities. And kind of as the conversation shifted, I mentioned some of the other passive investments that I had made, and conversation turned in that direction. And I got an email from this person later saying, like, thank you so much for your time. I really appreciate hearing about your business, and thank you for talking about other investment opportunities, because nobody else has ever shared those with me, versus compared to just trying to sell what their offerings were. So I think that's one of the things that I really gives me pleasure and excitement, is to really help other people. If I can help them with my investments, I'm happy to do that. But if I can share other places where I've invested or had success and can make referrals, I enjoy that too.
Absolutely. It's bringing value in some form or fashion, regardless
Yeah.
of whether or not it comes back, because some form or another it will.
Right.
Second question we have here: what book has had the largest influence on your life?
Well, I think when I first got started in real estate, I read Equity Happens, which is Robert Helms and Russell Gray's book. Fantastic book. It's currently out of print, so I think the only way to find it is to find it on eBay somewhere. But it just had a great story about, again, the title Equity Happens. So to actually the idea of like buying real estate doesn't matter whether it's big or small, but you have somebody else living in the property that's paying your mortgage. You're getting to take advantage of inflation, as if you have fixed rate debt, that debt stays the same over time, but your income just naturally with inflation goes up. And that over time, if you do this multiple times, you build up equity naturally. And that story really resonated with me, especially because I'd had some not great experiences in the stock market. Some of these public companies I work for, to me, that just seemed like a really logical path, logical, achievable path that made sense.
Absolutely. And we both know the famous quote: don't wait to buy real estate and wait.
Yes,
Because
right.
as you had mentioned, over time, I mean, you have the natural equity buildup through the tenants paying down the mortgage,
Right.
and the natural appreciation that this just takes place, even if you don't really touch the property.
Right, exactly.
Third question I have for you, Todd: what is the most impactful thing, whether it's a piece of technology, a habit, or a person, that's helped in freeing up your time?
Well, one of the things I just implemented recently that Hunter Thompson actually suggested is this program called Toggle, Toggl. And I started to use this, and it's basically a daily time tracking a tool that you can use, where you enter in, say, okay, from 9 to 9:30, I did this task, and you tag it to a project and maybe a sub project. And what it's done for me is it's kind of allowed me to see how I'm spending my day. Because I think one of the things that I've had struggled with sometimes is not achieving everything I wanted to get done during a day, and the to-do list just sitting there. And as I've used this tool, it's really given me an insight into how I'm spending my time and where there's gaps, because you see it visually on a timeline. And if you mess around for half an hour flipping through social media, you've got this big gap on your calendar that as that has happened, sometimes I look back and think, wow, like what happened to that half an hour? That half an hour is just gone. I need to, train myself and make sure I'm not doing that. So it's really been a great tool to allow me to focus on what my time is. And because I'm tagging them by project, after the week's done, I can really see where I'm spending my time, how much is on, reading, personal development versus any of the different syndications I'm working on or growing my business, whatever it might be.
Fantastic. And how often do you log that? Do you log it in real time? Like you hit start when you start and then end when you end it, or you kind of backlog it when you're done?
I would say kind of as I'm doing it. Most of the time as I'm doing it. So I have that open in a separate browser, and as projects are starting and finishing, I'll keep track of them on there.
Gotcha. Yeah, we use that for our. We have virtual assistants that help us in our team, and Toggle is one of the ways that we use to help kind of keep track of what they're doing.
It's really an eye opener.
Absolutely, and I mean it really helps guide. At the end of the year, we were able to reference like, okay, where are you spending most of your time? Okay, is this the highest and best use of how we're utilizing your time? And if not, maybe we can scale back on this so that way you can focus on doing something else that's of more important or will have a greater impact on us moving forward.
Yes,
really nice.
And it's allowed me to see too, where I'm spending time on different projects. Like sometimes maybe in my head, I think, oh, this certain asset that we own, this syndication I put together is taking this much time. And you look back in a week and think, wow, like that I only spent 5 hours on that last week. Okay, that's not as bad as I thought it was.
Absolutely. All right, fourth question we have for you, Todd. What is the number one piece of advice you would give to anyone else looking to achieve more control over their time?
I think I guess probably taking action in if you've got a goal that you want to achieve, or you want to take a step towards starting your own business, or maybe whether it's real estate or anything else, to go kind of outside your comfort zone. I think taking one or two steps towards that goal, I think is the biggest thing, because if you continue to do the same thing you've been doing, you're going to get the same results. So it does take stepping outside your comfort zone and being cognizant of not looking necessarily towards the very, very end goal that might seem unachievable, but what are the one or two steps that you can take to get one or two steps closer to where you want to go?
Love it. Absolutely. I mean, that goes hand in hand with The One Thing by Gary Keller, right? Like,
love
what is
that
the
book.
one thing that I need to do to help move my business in the right direction?
Yeah,
and
sometimes
so if
it's
you can
just
focus
getting that first stone pushed, or that big wheel rolling, that's the most important thing.
Absolutely. Yeah. I mean, there's so many different things that we have to juggle on a day-to-day basis. And as long as you kind of get yourself in a position where you can focus and just focus on one thing.
Yes.
I mean, even at the end of the day, whatever else happens, at least you got that done.
Yes, absolutely.
Fifth and final question. What is the best way for our listeners to get in contact with you?
Oh, sure. Well, my company is Blue Elm Investments. So it's BLUEELM, like the elm tree investments.com. So you can get me at my website. My email address, Todd, TODD, at Blue Elm Investments. Feel free to sign up to my investor club and we can connect. And I love talking to potential investors all about real estate.
Fantastic. Well, Todd, really great information today. I love how you shared with us and our guests the early days in your journey as a college student, how you ended up in the finance realm, and the jobs that you had to go through to get yourself in the position to where you are today. I loved how you talked about the different challenges that you overcame having that W-2 job and the realization that you had when you finally said, I need to gain more control over my time. And that's when real estate came in.
Yeah.
I also loved how you shared with us your experience in real estate and how you transitioned from investing in those single family homes in the Dallas market up into investing in your mobile home parks, your apartments, and mortgage notes. I just want to thank you so much for being a fantastic guest on our show, and I really look forward to remaining in touch.
Thank you very much, Chris. I appreciate it. I had a good time.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Tribio. Till next time.